And we're live. Happy Wednesday, everyone, and welcome to the Mojo Show, where we talk everything real estate. I'm your host, Joe Mortgage.
And I'm Cup of Joe Mortgage.
This week's episode, we're continuing on with our 6-part series on decoding mortgage programs. And this week's episode, we're focusing on mortgage programs for new construction homes. But before we get to that, Joe, last week, and we told everyone 2 weeks ago, because obviously we weren't on last week. We were up in Detroit, Michigan, and getting that at the VA Success Track up there in Pontiac, Michigan. What a great time that was, wasn't it?
Oh, it's fantastic. Thank you to Patton and UWM for putting this all together, and everybody else that works so hard at it at U Mortgage. Learning from the best in the VA world is just amazing. There has so many things to take away, but the benefits of the VA program for our military is a special thing that they get, and I always loved the VA loans. They're always the best loan, in my opinion, out there and in any situation. And trying to figure out some of the reasons why realtors or other people kind of have that myth about them, figuring out some of the myth busters and sharing that with my realtors. That's been a great takeaway from up there. So what was something that you took away?
Yeah, I agree with you wholeheartedly. The VA loan is like the best loan out there. I think the only loan that might be better than the VA loan is the VA IRRRL, right? Because that is so streamlined and no appraisal, it's super cool to be able to do. I know you've done some VA loans. I've done VA loans over the years. I have always felt very, very, I don't know if proud is the right word of it, but being that I come from a military family, even though I didn't get to serve like I wanted to, but to be able to help out the veterans in this way, and those are currently serving, I love it. I love the opportunity to do this. And any of you realtors out there, please, if you're getting pushback from your clients that you're listing homes as far as not wanting to accept VA loans, please call Joe or I. The VA loan is actually one of the easiest, best loans, especially when it comes to appraisals. But we're going to get into that actually next week. So teaser for next week. But yeah, the VA loan, it was so great being up there in Michigan, even though going back to my hometown, so to speak, right? I don't know what it is. I'm sorry, Michigan, Detroit, but every time I fly in, it's just gray, gloomy, and it's the middle of June, and it still was gray and gloomy. And I'm like, why am I coming back here?
So it was hot though. It was warm.
It was. Yes, yes, unusual.
Well, I'm excited about today. Tell our viewers what we've got in store for them today.
Well, speaking in regards to VA loans and stuff, even though we are covering mortgage programs for new construction homes, we got a special guest on today. He is a veteran of the U.S. Marine Corps. He's had over 20 years in the mortgage industry. He's formerly the executive vice president of specialty lending at AFR, or American Financial Resources. Please welcome to the show, Shaun Hamman, everyone.
Morning, guys. Joe and
Welcome, Shaun. Doing great. Hey, before we get into it, Shaun, tell our viewers a little bit about yourself, and what drove you, through life, and then where you're at today.
Absolutely. So I am a father of 2 beautiful daughters, have an amazing wife, live in Clearwater, Florida, and relocated about a year and a half, 2 years ago from northern New Jersey. And really have been in the mortgage industry all of my adult life. So coming out of the military, wasn't exactly sure what direction I wanted to go. Got into the technology side, worked for Bloomberg Financial in the city for a little bit, and then really, wanted to focus on numbers and things like that, and thought real estate and mortgage was going to be the direction, and got a little exposure to it, and found that was the direction that I wanted to go and really wanted to focus on. So it's been I'd love to say it's been, every year has been amazing and things are great, but as the industry, goes ups and downs, but took a lot of, as yourself, Joe, have been in the industry a while, saw and lived through the housing crisis, many, many years ago, seeing clients that were, overextended into the market, it shifted and really saw, what the industry can do, and then and saw what it could do as far as from a growth perspective, and really, growing and building a business on the recovery of all of that. So, that leads me up to today here, and I'm really excited to be part of U Mortgage, and what we're doing here as a company, and not only serving our veterans. I know that was our primary focus. Last week we were really getting educated up on that, but overall, just really seeing a journey in the mortgage industry and enjoying helping families. Ultimately, I think the one thing about our industry that's so exciting is the work that we do directly impacts clients. That getting people into homes, refinancing, consolidating, putting their kids through college, whatever that scenario is, marrying off a daughter, things along those lines. So it is exciting what we do in the industry as a whole.
Yeah. Well, we appreciate you coming on. I went through those same things that you went through, in 2007, 8, 9. Back then it was a different reasoning for, our industry. This one, rates went higher, but the great thing is the products were still there. They didn't just disappear overnight on, what we went through before. But I mean, we're here to talk about new construction, and I know you're one of our specialties that we go to, or specialists, excuse me, that we go to, and we ask a lot of ideas, or we get a lot of help. But kind of talk to us about what are some of the reasons that people are going to new construction. We've seen a big turn of people the last year and a half, really turning more to new construction. And what is it that you're seeing in this industry, in this market, why people are looking at new construction more?
Yeah, I think it's a few things. So I think one of the big takeaways is obviously home prices are up. So the homes that they're looking at are more expensive than they were years ago. And consumers are saying, if I'm going to make an investment of this magnitude, I want to get exactly what I want for my money. So if they have a budget and they've established that, and if it's in the range that affords them to, they say, I'm willing to wait 6 to 9 to 12 months to move into the property with exactly the fixtures that I want, with exactly the flooring I want. Because as we all know, and we're going to talk about it also on some renovation type products, when you're shopping in a particular market or you're shopping for a home, typically you have a list of 10 things that you want to check off. Most homes are going to check 7 of those or 6 of those. And then you're going to say, well, we can upgrade this, or we can do this down the road. Whereas with new construction, typically you're able to say, I'm 10 out of 10 on this because I made sure I got, everything that I need. So, there's a trade-off, and really time is typically that trade-off because the home has to be built. But at the same time, it's really exciting, whether it's a first-time home, so we have a lot of first-time home buyers that are also building in the process, or if it's somebody that's a move-up buyer and they're saying, you know what, if we move from our existing house, if I'm moving from a 3.25% interest rate, whatever the scenario, I want to move to exactly what I want. And that's what these products really allow people to do. So it's exciting. It's exciting to sit down with somebody and then ultimately say, yes, we can accomplish everything that you're looking to do in this move. And that's really the biggest takeaway. I do think, people don't, a lot of people are under realize what products are available, but there's products for construction loans from VA, from FHA, and traditional conventional financing. So really, there is a product for pretty much every budget.
Yeah. Before we go on to that one, what I'm seeing right now is, when rates did go up, the cost of everything went up too. Your lumber, your supplies, your concrete, and I think that back in 2007, when we were seeing it, you still had a bunch of builders, in my opinion, that were still out there building spec homes because rates were still good and materials were down. Can you kind of tell our viewers, kind of what your thought process was, why people, have seen that inventory, go way down in the market the last 2 years?
Absolutely. So the biggest thing that we saw throughout COVID was uncertainty, really, from the builder's perspective, not only from a financing, because there was a little shift of how do we document certain things while people are out of work or laid off for a shorter period of time. We've seen prices still increased across the board. I think everything, we see that at the, at the Walmart when you walk in to buy some food, and or anywhere else you go, everything's more expensive. But from a builder's perspective, the pricing is now consistent, which is really what a builder needs for the client to accurately quote what this home is going to cost over the next 6 to 9 months as they're buying materials for that construction. So although prices still have leveled off at a higher price point than they were 3 or 4 years ago, at least they consistently know what that price point is going to be. And materials are becoming available. So they're becoming on the normal time frames. One of the biggest things when working with builders is when they order their trusses and when they order their what they call window packs, when they order everything as a whole. Sometimes they were putting the order in and they'd say, well, the expected delivery is 18 months from now. Well, that means you're going to have a house without windows for 18 months. There's now they're under, slightly longer lead times than they were, but they know they're going to receive those items in 4 months, and they're delivering on that. So what's happened really post COVID, I would say, is consistency. People have a timeline that they can adhere to, which ultimately allows people, to build houses in a timely fashion.
Yeah, no, I think that's great. And I forgot to say it, Joe. So anybody listening in, please, we need comments, drop them in there for us. We need questions. This is your time to pick Shaun's brain on the topics that we're talking about today, on new construction and types of loans too. So please put those comments in there, and thank you guys for viewing and watching us.
Absolutely. Comments, because in talking about, I want to kind of pivot here a little bit from the inventory and talk a little bit about actual mortgages, right? For new construction. I mean, where does a person, Shaun, in your opinion, where should a person start in looking at possibly doing a new construction loan?
So I think the first thing, and I think every transaction should start this way, is it starts with a consultation and a pre-qualification process with your loan originator. It's sitting down, discussing the goals of the transaction, and then it's the originator's responsibility to come back and say, here are the optionality that we have. Now, in the construction space, I would say 90% of the people I talk to are not aware of the options that they have in the construction lending. So typically everybody thinks when they talk to their, local, bank, it's, well, I need 20% down and XYZ. And it's very, very cut and dry with that. When we look at the lenders that we work with, we have conventional 5% down products. So you can build a home, you can finance the closing costs, you could finance you could finance the land acquisition and the complete build and pretty much all of the soft costs in one large loan and be able to accommodate that. Most clients are not aware that they could do that with as little as 5% down. On a VA transaction, you could put no money down. You have if you have the entitlement, have the means to, for the mortgage, you can build a home with no money out of pocket as a down payment. So there's always closing costs and things as part of a transaction. And then with FHA, if you're building in a market that allows for, to be within the loan limits, 3.5% down, less than perfect credit, does work with an FHA or VA transaction. So there's a tremendous amount of optionality in construction. But again, it all starts with the initial pre-qualification, the consultation, and really the understanding of the product. So, and I know, Joe's is I know the way you guys approach this too, is you want the client to be educated on the product before they're moving forward. So before they've signed a contract with anybody, or, hey, we're under contract on land, you really should have that consultation and really understand the process and, get educated on everything.
And to be able to, understand the person's goals and what they're trying, so that we can match it with the right type of product. Because as Shaun, I know a few months ago, you and I were working with a client together of mine that currently owned a plot of land, and they were looking to do a new build or new construction with a modular home, right? And to be able to put it on there, right? And to be able to have the opportunity to take the current note on that land and combine it with the new construction closing costs and all the ancillary things, as far as, running electrical to it from the road, and plumbing and piping, sewer, and all that other stuff, to be able to include that into the loan as what we call a one-time close, right? Type of loan is so beneficial. Let me ask though, because you had said in regards to an FHA, VA, and conventional, and I'm asking because I'm kind of what USDA, is that there too?
Absolutely. So USDA
Okay,
is available. Depending on, that's a lot more, I would say, restrictive based on income and restrictive based on location. But
sure.
absolutely, if you fit those parameters, I did forget the fourth one there. So USDA functions very similar to an FHA transaction as far as for structure, just a different product line. But absolutely, and that's a phenomenal option for clients that meet that. That's 100% financing also. I always do stipulate, as crazy as it sounds, with USDA, because we get this question all the time, you cannot finance a farm. So even though it's USDA, we all
Right.
think it's farm. It's really a different department and different product line, but it's meant directly for residential financing.
So on the construction loans that we're talking about, this isn't like you go to a builder and they already have the home, and stuff. We're talking more of people building their own houses on their own lots. What is the typical time frame? Because that's one thing that I think realtors really don't understand, especially clients. What is the typical time frame from, we get pre-approved, we find a lot, we want to build, and then that loan, that one-time close loan, what is the typical time frame just to set the proper expectations from an LO's perspective and a client's perspective?
And absolutely, great question, because we every time a client applies, they assume that the process has started right then and there, and it has from a pre-qualification standpoint. There's really the key time for us from a lending perspective, and really from the borrower's perspective also, is once you have a ratified set of plans and a ratified contract with the builder. So we know how much it's going to cost to build, and we know what we're building. That's really the time frame when we're going to shoot for a 30 to 45 day close from that perspective. Some clients, depending on the complexity of the project, it might take 6 months to get the final plans, the final specs, because they're just, when they contacted you, it's just the beginning of the process. Same thing with the real estate agent. They know they're looking for land, but they haven't really ratified everything. So we want to make sure that we're definitely communicating that to our real estate agent and the borrower, to know that we basically have, I always call it pulling the pin on the hand grenade, right? Once we get plans and specs, that's when we know we have a defined amount of time. But until we have that, we need to make sure that our contract on the land coincides with when we're going to get our plans and specs completed. So again, like all transactions, communication is the key, keeping everybody in the process. It is customary for a land contract to be a longer contract than a traditional home purchase. There's a lot more moving parts. Most people understand that. Typically, you're also waiting on maybe the town for certain tests, or you're running perk tests. You're running different. Perk test is a soil sample to see if you could put, a septic system and what it will require for the design to be created. So there are more moving parts than a traditional home purchase. But again, it's really just about transparent communication to all parties involved.
Yeah. And I think that's the biggest thing is, yes, we can get you pre-approved. Yeah, you can find the land, but until you pinpoint your builder, you pinpoint the plans, you get all of that under contract and signed off, that closing's not happening until we get closer to that time, right? Or am I on the misperception of that too?
No, absolutely. And what we've found is the majority of the builders that your clients are going to be working with, and there's exceptions to this, unless you're going to what I would call a fully custom home builder. Most builders that you're going to work with are going to be what we would call semi-custom, where typically there's 10 to 12 floor plans that the builder owns. They own those assets, so it may save you costs on purchasing them. And then you're going to make slight modifications or changes to the floor plan, but the basic floor plan is there. So if you're working with the builder that builds what we call semi-custom, you're going to be able to go from conversation with the builder to minor adjustments to the floor plans pretty quickly, typically within a 4 to 6 week period. And you get the draftsman involved and they make their changes. And that's really what you need, because you have to present that to the town for building permits. You have to present that to the town for septic plans, all of these things. So but again, this should be something that's exciting, right? You're picking out your home. clients are generally very excited about the process too. So it's good from that standpoint.
Fantastic.
I like that.
So for like spec homes and that, is that what we're kind of talking about? And does a different loan type, just a standard construction loan, or is one-time close better for those, or what do you see?
So typically when we're seeing a spec home, that's usually where a contractor or a builder has said, I'm going to build this home essentially on spec. They're building it as an investment, and then they're going to market that to the general public. So it is sometimes the process, but a little bit different than what we're typically seeing. On a spec home, we would traditionally just do a traditional loan because the builder's already obtained financing. We do have product lines that we could talk with builders that we can assist with that in certain states. So that is something, if there's builders on out there looking right now for financing, we do have that option. It's a little bit of a different process, but effectively accomplishes the same thing. That the process flow works the same.
Awesome. Good stuff.
Well, I mean, we have a ton of things that we can keep talking about on all these loans. I think we said it best is get with the loan originator, figure out what your plan is before you talk to builders or before you go and look for lot loans. But one thing that I do love about the one-time closes or construction loans is if you already own the land, that value of that land can be your down payment. So people that, if you own your land and you have some equity in it, even if you're making payments on it, that could still be utilized for your out-of-pocket money, for, a little bit more towards the construction of things. So, that's one thing I know that we didn't talk about, but I just wanted to put that out there. But instead of building new, instead of doing, selling and trying to move up to a newer home, what's another type of product that kind of puts construction in there that you would recommend too for people to look at?
Yeah, I think one of the biggest things that people are especially now are looking at, and I'm even going through this myself with my family, is we love the school district we're in. We look for, if we potentially look for a larger home, we don't see exactly what we love, and we say, let's renovate our existing home, and maybe whether that's adding a bathroom, whether that's adding a level. You could do something as simple as renovating a kitchen, if that's the pressing point that you want to do, or you can go as exhaustive as adding a level to a home or expanding out, with an additional foundation. So renovation loans are also the process is very similar to construction. It's just a smaller construction piece, but the process itself is handled very similar. Whereas you want to get pre-qualified, you want to establish a budget, you want to talk with the builder to make sure you're within that budget. But that really allows clients to not necessarily disrupt their life. You may be disrupted in your home for a little bit as you're, doing different things, but you don't necessarily have to time things around school, when school's in or out, or what you're doing. You can renovate in place, be able to ultimately, we can also, when we're looking at that, we underwrite to the future value of the home. So that's the biggest thing. If you don't have the equity in your property today to just do a cash out refinance, we're gonna appraise that property and what we call the future value or the after repaired value. So once you've added that extra bedroom or extra bathroom, the appraiser is going to look at the value of the home after it's completed. And that's what establishes our budget. So even if you put 5 or 10% down, maybe a year ago when you purchased home, you said, well, we don't have a ton of equity. There's still products that are going to be available for you to really be able to finance ultimately your dream, right? Without having to move.
No, and that brings up a great one. I was about to say that same thing, but you brought it up. Cash out refinances, you have to have the equity in your house. But that future value, I don't think everybody understands what that is, because like my wife's like, oh, we could do a renovation loan, and she's just wanting to change out the flooring. And I'm like, baby, that's not really going to change the value of our house. It'll make it more aesthetically looking, and people will probably want it more, but it won't truly change the true value of the house unless the appraiser's opinion and things like that. So can you just touch on that briefly? Like what typical things are you going to want to do that will truly change the value of your home versus just updating your paint?
Absolutely. So, and this is a great point, because you'll have clients that purchase the home and they, I always joke and say, well, they replaced the ceiling fans and they painted and it looks a lot better,
Yeah.
But the square footage is still the same. The bedroom
Right.
bathroom count is still the same. So it may be more appealing, but it's not necessarily higher value. So when
Mhm.
we look at things that we're looking at return on investment, so kitchens remodels
Mhm.
typically have a higher return on investment than the money that they cost to put in. So if you're going to spend $50,000 on a kitchen remodel, it may add $60,000 or $70,000 in value to the property because the kitchen obviously is a big ticket item. Bathroom remodels, things like that, are you're going to get the most bang for your buck as far as for additional value to the property. When we look at people renovating, adding bedroom count, and which is adding, not only square footage but also just bedroom count, which now takes your home from maybe being compared to 3-bedroom homes in the market. By adding an additional bedroom, now you've opened the door. Now you're looking and comparing yourself to 4-bedroom homes. Typically,
Right.
larger square footage is going to have a higher value. So we need to be considerate of that while we're doing repairs. And the appraiser is going to the appraiser is really our friend in this situation. They're giving us and making sure that we're not overspending in the market. And you may choose to do that. I have had clients that have chose to move forward because they knew that they were going to be in their property for 10 plus years. They really wanted those items, knowing that they were overspending in certain areas, but they said, you know what, this is our home. This is where we want to live. And again, that's where having a conversation with the loan originator up front, looking at what we expect the qualification to be, what we expect the cost to be, and then running those numbers and just giving a realistic expectation of what maybe cash to close would be, or how that would affect the financing. But again, it's in most areas, if you're investing in the kitchen, if you're investing in bathrooms, if you're adding bedrooms, anything like that, you're going to see a large appreciation in the house. But to your point, if you replace carpeting with hardwood floor, you're not going to get probably the $40,000 in hardwood floor cost. You're probably not going to see that.
Yeah.
You might see a $10,000 pickup, but you're not going to see a full 40,000.
Right. Right.
Well,
Well,
yeah.
renovations are great, right? To be able to, like you said, add value to the home and that. But what about, let's talk a little bit about purchasing a home that needs renovations. What are some options that people have that want to purchase a home but know that there needs some renovations done to it along with the purchase?
Absolutely. This is probably, in my opinion, the most underutilized loan scenario where people are searching for a specific market, whether it be a school district, whether it be, the side of town that they want to live on because their friends are over
Mhm.
there. And as we know, there's limited inventory in some markets. So you'll walk into a house and you don't like the exterior color of the house, or you don't like the flooring, or you don't like things. So normally you would just say, well, we also don't have it in the budget to do all of these items when we move in.
Right.
We can do a renovation purchase, which means you're acquiring the property as is, but we're going to establish a budget to immediately do flooring, painting, whatever those items are, and we
Mhm.
can encapsulate that into the loan. So it really allows you to buy location. And as we know, real estate is location, location, location. Allows you to buy where you want and then renovate to what you want. So it really kind of gives you that ability to have the best of both worlds. And again, most people oversee this. What we also see is homes that are in need of repair. What we see
Mhm.
typically is in a market, I'm sure your market's similar to mine, is maybe somebody has lived in a home for 30 years. They've
Yeah.
never, the house is maintained, but
Right.
the kitchen is the same original kitchen that was there 30 years ago. And
Right.
the flooring is like that shag
Right.
carpet that you're going, man, this was great when it was put
Yeah.
in.
The yellow ceilings and
Yeah,
they used to be white and
exactly. And what it allows you to do, those homes typically are sitting on the market a little bit longer because of these items. You can come in, present an offer, be able to get your contractor bids, and be able to close on a transaction knowing that you're going to replace the flooring, you're going to replace the kitchen, and be able to
right.
finance all of that. And then again, it goes back to very similar to a construction loan where now you pick out the exact cabinets you want. You pick out
Right.
the exact, fixtures you want.
Countertops and yeah.
Absolutely. I noticed in my experience when we were buying down here in Florida is we would walk into a house, brand new renovated kitchen within the last 12 to 18 months. But my wife and I would look at each other like, who would pick that countertop? Why was that? And it's new. And the problem is it's new and it's really great quality and it's granite or whatever the material, but you're going, I don't want that. That would not be my preference. So
Right.
what one person loves is the exact opposite. Somebody else walks in and goes, oh, this has got awful. So it's interesting. Whereas with renovations, it allows you to pick out exactly what you want. And, 3 to 6 months down the road, you have the house that you envisioned when you moved in. So
good stuff. Good stuff. Well, I know we're getting towards the end of our time here. Really do appreciate you coming on the show, Shaun, and providing all the insights and that to our listeners out there. If any of you have additional questions for Shaun or want to get in touch with him to chat further as far as your particular goals and situation, what you're wanting to accomplish, Shaun, what's the best way for people to get a hold of you?
Yeah, absolutely. So directly, if you want to direct me by email, so Shaun, so it's Shaun, SHAUN @umortgage.com. And then if you want to reach out directly, my number is 201-874-6595. Love the chat. And then anything that's local in the Texas market, I know, Joe and Joe are more than capable, and you're in great hands with them also. So, love to hear from anybody, even if it's just answering questions in regards to the products.
Fantastic.
Well, we appreciate you at U Mortgage, and that's if you're a LO that doesn't have support where you're at, hit us up, because this is Shaun. He's not one of our bosses or anything like that. He's one of our coworkers. Does a great job out in Florida, but he was willing to come on here because he does do these things for us, and that's an awesome thing. And thank you very much for that support. I know, Joe, you're going to say, Joe, do you have anything else? That's what I had. So
okay.
I just wanted to say thanks to Shaun again.
This is great.
Well, let me talk about next week. Next week, we're going to be wrapping up our series on decoding mortgage programs. And in preparation for, would you believe next week is 4th of July, gentlemen?
Oh my goodness.
4th of July,
Where'd the year
Right?
go? So
I needed to slow down. My son's graduating next year, so I need to slow down a little bit.
Well, in preparation for the 4th of July holiday, we're going to decode the best mortgage program out there, as we talked earlier, the VA loan. It's super excited to have special guests that we're going to have on. Then we're not going to reveal it right now, but we'll reveal it next week. So make sure you tune in next week at our usual time, Wednesday, 9 a.m. Central Time. Definitely want to thank everyone for tuning in today. Would you believe?
Yep.
Finally, at the end, we actually have finally a comment on this stuff. So Maria, thank you so much. We love you and appreciate your comment. And thank you for everyone that did tune in. And if you would, if I'm stumbling my words, Joe, I haven't had
You
enough
got
coffee.
this. You know what you want to tell them? We need likes and subscribes. Let's get to the YouTube channel.
Exactly. Go to our YouTube channel at the Mojo Show Real Estate Podcast. And while you're there, hit the subscribe button, because we are on a mission to get to 1,000 subscribers. To close things out, I'm Joe Mortgage, and that handsome guy over there is Cup of Joe Mortgage. And we'll see you next week.
Mr.